what's on your radar today? We hit the top end of things, and now I don't know.
We're kind of sort of sliding sideways here, holding right near the highs. I think the interesting thing yesterday is, and maybe it's a little bit of a preview, is just very kind of index level, boring day, but below the surface, a lot of movement. So all the cyclical stocks, all the stuff that had been depressed and nobody wanted, were up. Semiconductors, transports bounced, and all the rest. And then the safer things like utilities and staples got hit. So it seems like the market is a little bit spring-loaded for an excuse to continue in that manner.
Is that a bet on something getting settled or something like moving forward with trade talks, at least? Because with the sectors that you mentioned are all ones that are kind of tied in with
a couple things. First of all, it's gotten very stretched in the opposite direction. So the defensive quality stocks have been done really, really well. And we're coming to the end of the month and the quarter. It's a natural time to rebalance. But then you had Micron earnings, FedEx earnings were excuses to do that. And then I do think, yeah, I mean, and even banks did okay yesterday. So, you know, it's one day. You don't want to necessarily extrapolate. But that, to me, was the action. And, yeah, I think the market is hungry for some kind of sign that there's going to be an excuse out of the trade talks to say, fine, we can overlook the fact that maybe it's going to be a sloppy second quarter earnings season and all the rest.
You kind of, I think, Eric, listening to Mike, my first question to him, you're there, aren't you? Sort of we're at the high end of something. You think it fully valued, having trouble making any advances, at least near term?
At the index level, and I think the key message is what's going on beneath the surface. The market internals are masking some huge divergences we've seen this year. So from an index level standpoint, we're fading kind of this rally into the G20. We don't think there's going to be earth-shaking news out of this meeting. And in fact, we think indexes kind of keep going sideways with a fair amount of volatility. However, we see a lot of opportunity underneath that to take advantage of some of the shift in the market internals, in the underlying dynamics. You see the difference between large cap and small cap in the U.S. S&P's up over the last year 9.5. Russell 2000's down 7.5. Anytime you get that kind of a divergence between large and small, high beta, low beta, there's an opportunity to take advantage of that divergence and play more attractively valued stocks that can still benefit from the extension of this cycle.
We've had other guests this week just say avoid international stocks. You think emerging markets are not to be avoided, but only because they're cheap. I mean, just because they're cheap doesn't mean...
Yeah, that's not a good enough reason on its own. However, we expect the dollar to soften from here. It's been 10 years since we experienced a Fed cut. We've forgotten how impactful that is on certain areas of the market, particularly the U.S. dollar. We're starting to see it in the move. Dollar's off a little bit, but some of the pro-cyclical currencies are way up. Gold is up. Bitcoin, which we don't trade in, is up. We expect further softening of the dollar. That's going to create some interesting opportunities in EMFX, EM local currency bonds, and EM stocks.
I mean, the international has outperformed the U.S. for the last couple of weeks. It's been a very short period of time as the dollar had come off. And yesterday, the China ETFs were up a lot more than the U.S. indexes.
Can we just talk very briefly about the instant reaction to this Wall Street Journal report? Futures had been up about 40 points or so. Now the Dow is looking down 90 points. And again, that's not a major move, but the knee-jerk reaction may have been, okay, great, he's coming with settlement terms, so maybe we get something sooner rather than later. But then you read what some of those terms are, and it's going to be a high bar to try and jump over.
They may be 90% down on the deal, but that last 10% is still pretty big. And you think about what's the U.S. administration's incentives here. They want to stimulate and catalyze tax rate cuts, right? So they don't have a lot of incentive to get a deal done before July 31st, the next Fed meeting. I think that this continues on for a while. I think the best possible outcome is just a delay in further tariffs, an agreement to keep talking and to hold off on tariffs. Right. A lot of that's priced in.
And just to read the market's mind, I wonder if the, call off the dogs on Huawei is the sticking point.
It's got to be. If we've said that it's a national security issue,
exactly.
How do you just turn around and roll over? I mean, not that we didn't do that with ZTE. But,
sure. But that's the issue. We did with ZTE.
And given the stance to date, it's very difficult to see that now you're going to reverse.
There's language, that it's a nuanced thing. It's not all or nothing. It's not all or nothing with the security. In the past, we've done it where we've said, look, this is a real problem here. Do you really think Huawei's going out of business and never going to do anything ever again? That's probably not going to be the end result.
Well, no. I think you either declare something a national...
I know.
By the way, I could see how it could be a national security issue.
Right. Well, you couldn't before, but now you think...
Well, no.
You say there's really no evidence.
There is no evidence as of this moment.
Well, then you shouldn't worry about it. So, Eric...
Joe... No, don't end the conversation there. You either have to decide.
Well, you know that in negotiation, it's always been a negotiating tool. It's always been a negotiation.
To negotiate with a national security.
I know. In a perfect world, you would never do that.
With a company that people are describing as, quote, dangerous.
Right. In a perfect world, you would never do it. But
so the Secretary of State sits right here next to us, looks you in the eye, says it's a dangerous company, and you say it's fine for it to be a negotiating tactic.
No, I'm saying that there's a way of making it less of a security risk that both sides can be satisfied as part of a negotiation.
But tell me about how that works.
I don't know the exact details of how you would do that.
We have not found one guest on this show. I asked that question for the last 3 weeks. Of any guest, which is thread the needle. Show me how you can actually.
Do you know enough about the details of what we're?
I spent an inordinate amount of time trying to understand how.
So you don't think there's any way that at this point we can?
I think you either have to you either declare it a national security problem or not.
Then there will never be any deal because.
I don't understand how you could get there.
Well, then there never will be one, Andrew.
Can we just
that's the world we live in.
Take a look at Boeing shares are now down 6%. That's what's actually adding the pressure to the Dow that we're seeing this morning.
Like 80 at one point.
Yeah, so
much more than 40.
We're looking right now at Boeing shares down, trying to look for anything new. There is something that's hitting the wires right now, talking about how the IATA. The airlines reinforcing their calls for air safety regulators to cooperate on returning Boeing. The International Air Transport Association, which represents more than 200 carriers, is calling for them on Boeing 737 MAX pilot training requirements to be added onto this, which could, I would assume, maybe add to even longer on the time frame before you can see the 737 MAX back in the air. We already had talked about the other issues facing Boeing, but this is going to be something to watch very closely with this today, too.
355. So at this point, that's just do the math. That's where we'd be up.
All the laws.
That's all. We were up, what, 80 or so, and now we're down. We're down about 80.
Yeah. So you can say it's the trade talks, but if you look very specifically, it's Boeing.
Well, one easy way to, put it in context is S&P futures are flat.
Right.
So
that's
about where we are.
Yeah.
Which is about right.
Yeah.